Hut 8's Ontario Bitcoin mining operation halted amidst power disputes. The mining company confirmed the operation is still shuttered after contractual disagreements with their power provider, Validus Power. Hut 8's Bitcoin mining operation in North Bay, Ontario. And this is a big deal, guys, because remember, Hut 8, we thought we're doing okay. We have we have Marathon Digital, but it seems like the domino effect is hitting here. A lot of it, of course, surrounding the price of energy. And the fact of the matter is a lot of these power agreements and power companies that were, or the power agreements that power companies were putting out there are in a position of not being as straightforward as I think people expected. And it's putting miners in an awkward position. And the price of Bitcoin has to come up significantly to really accommodate for all the increase in energy costs that's been happening, right? But previously, Hut 8 notified the public of problems with Validus in November of 2022, as the firm reported in its Q3 operations update that it had issued a notice of default to Validus for failing to hit certain operational milestones. Mining at the facility site was completely halted 2 weeks after this, as Validus stopped supplying power to the facility while delivering its own default notice for payments that it claimed Hut 8 failed to make. The mining company's Q3 report also stated that Validus also has demanded the company make payments for delivery of energy that are higher than these negotiated under the terms of the PPA. See, the thing that gets really interesting here, because obviously this hit me before a lot of other people, or the reports, technically I guess it was hitting around the same time. We're just not getting the reports of it. These power agreements are not always set in stone as much as you would think they are. And there are ways around it, right? I've seen the ways around it. It's very frustrating and it does feel very unfair, but that is life to a certain extent. It's just at the same time, you had a declining price, obviously, in Bitcoin due to all of the issues going on. And it puts miners in a bad position, right? They over leveraged. They got out too large of loans in a lot of cases. And the power companies are also in trouble because of, obviously, new regulations surrounding the cost of power. We also have, of course, availability of energy, which is obviously a huge problem. And then as far as the relationship for North America and the price of energy, there is a big effect of not continuing with that pipeline that would have definitely changed things, I think, from an energy perspective between Canada and the US that was obviously put to the side. Fluctuating power costs can have a major impact on Bitcoin mining operations, and favorable power purchasing agreements are an integral part of a sustainable firm. According to their most recent December update, the company is continuing to explore alternatives to mitigate the impact of the dispute with the third-party energy supplier to the site, including through organic and inorganic growth opportunities. Hut 8 has indicated that it fully intends to resolve the issue and restart operations as soon as possible, whether that be through a resolution involving Validus or, as the company indicated, a potential alternative power supplier. Now, I think that obviously, I think that when it comes to PPAs, and look, it's probably highly advised that you get some legal assistance when looking at these PPAs. In my position moving forward, there will always be some sort of legal representation when signing and before signing any PPA. Now, that does cost you more money, but if the flip side to that is that you end up with a completely shut down farm, then obviously it's worth the money up front. And that is one mistake that I will regret for quite some time, right? And it's one that I'll warn you guys about now before we get into, starting to really spin up mining again a lot. But does that mean the hash power goes away? And the answer to that is no. Why is the answer to that no? Well, currently what happened is a lot of the large miners are going away because they took out loans backed by the hardware that was mining the cryptocurrency. Well, if you took out a loan on a machine that was worth $12,000, last year, and now it's worth $2,000. And then the company recoups their loss by taking the mining machine back. It now has no way to sell that on the used market to make their money back on the loan. It's actually so bad, the margins are so terrible for them, that the only option for them now is to begin mining with these machines, quite interestingly. So crypto lenders now are morphing into miners as repossessed rigs pile up. One way for the lenders to prevent further losses from defaulted loans is to keep the collateralized machines running and generate some income. Crypto lenders have repossessed so many Bitcoin mining rigs, they're resorting to plugging them in and extracting tokens themselves. Lenders are getting creative as to what they can do with mining machines, as they accepted as collateral for some $4 billion in rig-backed loans that were underwrote when the rally of Bitcoin seemed unstoppable. With the recent surge in loan defaults and plunge in cryptocurrencies, the value of new generation machines has dropped 85%, according to data from Luxor Technologies. While some machines are just sitting in a warehouse waiting for prices to recover, lenders like New York Digital Investment Group, LLC, are using debt negotiations to find alternative solutions. In December, NYDIG agreed to pay Greenridge Generation Holdings not only for its mining rigs, but to operate them in exchange for debt reduction. The deal effectively made Greenridge one of the largest Bitcoin miners, a hosting firm, while NYDIG became the miner. We talked about this last week. Lenders are flooded with mining rigs, said Wolfie Zhao, head of research at the Miner Mag, a research arm of the mining consultancy Bloxbrig. One way for the lenders, to prevent further losses from defaulted loans is to keep the collateralized machines running and generate some income. Now you can see here crypto mining loans at risk and it's crazy. It's an option lenders are taking more seriously, especially those that already have mining capabilities to build on, including Galaxy Digital LP and Digital Currency Group's Incorporated Foundry. Bitcoin mining, which uses specialized computers known as rigs to validate transactions on the blockchain in exchange for rewards in the token, was among the most lucrative businesses in crypto. Miners had sought to leverage that value in the run-up of Bitcoin's historic rally. But with a surge in energy prices and Bitcoin down 58% on the year, a number of loans are now underwater. A Valkyrie index of Bitcoin miners is down 75% from a year ago, even after this week's 30% jump on optimism a U.S. economic recovery could prop up crypto prices. NYDIG originated about $378 million in rig-backed loans to miners between October of 2020 and May of 2022, according to data compiled by the Miner Mag. Already, it's received about 26,200 machines from Stronghold Digital Mining Incorporated to eliminate the miners' $67 million of debt, and it's likely to take over another batch of machines from Iris Energy after it defaulted on a $103 million loan earlier. So here we go. NYDIG on the hook for Argo, Greenridge, Iris Energy, Core Scientific, Stronghold, Rhodium, and Cathedra. So obviously, what you would end up seeing, right, is I think it said it's already done 26,000 from Stronghold. Core Scientific is getting kind of bailed out by BlackRock, so maybe that'll be okay. We'll have to see how this goes, right? So lenders have been moving more rigs out of storage, said Mason Japa, chief executive at crypto mining services company Blockware Solutions. Quote, some lenders are already on the lookout for high quality hosting sites, he said. Lenders can recover some losses if they can find reliable Bitcoin mining facilities with cheap electricity, but they are hard to find. Of course, lenders may still choose to sell some of the machines, even at a steep discount, he said, but they may not want to sell a large amount as more miners such as Core Scientific go bankrupt. Even more machines are expected to hit the market. If that depresses prices even further, that means even greater losses for lenders. Now, as we start to see this recovery, what's important to pay attention to is going to be the price or the cost to mint a Bitcoin. And the reason behind this, right, is going to primarily be the fact that it will directly influence what the banks are willing to sell the Bitcoin for, especially if they think or are even aware of the halving cycle, right? Which means they're only going to be wanting to recoup cost, if they have to. And to a certain extent, recouping some of the cost and then holding on to the rest of the Bitcoin in hopes for a pump in the future could be a legitimate strategy from some of them. And we'll kind of just have to see where they decide to go from here. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.